Hey folks, happy Wednesday. We are midweek here on the 25th of May 2022. Yesterday we did see an attempt at driving back down towards the lows of last week on the SPOOs, but no chance. We did kind of get upheld in and around the gap that we had on Sunday night coming into Monday on the Globex reopen. So what we're going to look at today is SPOOs, S&P 500. We're going to look at oil, and then we're going to look at Tinos. Okay, so bonds. So bonds are going to be the hot ticket that a lot of investors are going to be kind of looking forward to getting into now over the general risk, talk of recession, rate hikes, stagflation. These are all, the kind of headwinds for the bulls at the moment in equities. So, without further ado, let's get over to the charts. And so, first up, we're going to look at SPOOs for the US equities picture here. We're looking on the daily bars. So you can see lovely line in the sand here, 38.09 quarter. We'll actually go back on a weekly view here to just get the bigger picture. So you can see I've had this area on high of the 16th of Feb 21 to the low of the 22nd of March 21. And that 20 low, the week of the 22nd of March 21, really was the bottom on this market right now. And so we are weekly bars here trying to lift up. Now this gap area has been interesting. I mean, I've been tracking this for a while. We'll just leave it on in blue here, say, for now. And so that is current resistance on the week. I think we can try and lift up out of here, getting back towards something a bit closer to average pricing. The 20 weekly period moving average is crossing below the 50 weekly exponential moving average period here. So I think with that with that occurrence, we may try and get back here to average pricing before then thinking about any further downside. Pretty impressive from the bulls yesterday. If we go down to the 60-minute here, you can see generally this line in the sand breaking down yesterday, and that sort of gap area that is now filled, obviously, as of yesterday. Lovely trading to be done here through the open, driving down, filling the gap, finding some supports here late, then driving back up to almost flat on the session for the day. Actually, I think, did we go positive? Yeah, we did go positive on the session on the day. Did we? No, we didn't actually get positive. We did tag a positive, but then closed just below. So I think for SPOOs, there are some pretty decent supports that came in here. I think a pullback onto the top of this area. Now that we've had the gap fill yesterday, I think we could get into a long situation. But of course, the 39.15's half is going to be the level that I want to see defended quite well. It on Tuesday acted really well as a support, and just every time we came down there, just finding really good buying, driving up. But ultimately they did get washed out. So I'm going to be looking at that 39.15's half again today. Should it test? If there are no buyers there, I'm going to be kind of looking for the short side and to open up this range again. So that is the SPOOs. That is the SPOOs for today. Now, on the bonds picture, interestingly enough, it was in part of a conversation with an oil and gas investor last night. And one of the, I think I could probably bring this up here actually, the graph that I wanted to show you on this is it's kind of this, right? Basically, oil, not bonds. So in the last period of aggressive inflation in the 70s to early 80s, you can see here, energy stocks, big outperformer. Treasuries, really poor, the worst performer. Now, there were a lot of different dynamics going on. The oil industry was actually about, coming into a huge amount of discoveries then. And then in 83, actually, there was a whole Middle Eastern impact on oil, given OPEC and Saudi Arabia not playing ball generally with the OPEC picture. But if I just kind of zoom in on this here a little bit, I'll just I'll just take this off for now, and then we can bring this picture in here, just to make it a little bit clearer for everybody. So this is essentially the return, 71 to 81 that I'm talking about. Now, why am I bringing this up? Well, I think T-notes and the Bund are set to have a pretty decent run back to the upside. Here is the monthly bar picture on the US 10-year. And you can see that we've, really started to appreciate back up in this trend. I think longs on the bonds are definitely called for at this time. Especially the Bund, I think, has a clearer picture. But, I do want to be playing long on the bonds, only buying the pullbacks. I don't think you want to be a seller on these bonds under this environment. And so looking at, upper level targets here on T-notes. So just wanted to kind of mark everyone's card on that. Similar, if not cleaner picture on the German 10-year. So again, I'm looking to kind of now get into holding longs and staying in them for a number of weeks on the US 10-year and the German 10-year. All right, that's that in terms of looking at SPOs, oil, and T-notes. I think gold, it's a tough trade, but supports 1849s. Maybe it will rebid. I think cable is going to depreciate down probably another 0.5% today. And NASDAQ finding it hard to get any gains here. So listen, that is it for me for another pre-US look ahead. Have a great session, and I'll talk to you later. Cheers.